Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the second edition of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. His website, MacBethMcLeodGroup.com. Welcome back to the show, Hilliard.
Nice to be back.
Hilliard, the federal government is upping the ante, trying to help first-time home buyers. Did anybody bite the first time, and will they bite a second time?
I think only about 4% of the program was taken up the first time. So what they did, they tweaked it to try and because the issue was that, I forget the exact numbers, but you could only have up to a certain maximum amount of income in the household. And of course, nobody below that level could afford to buy in Vancouver or Toronto. So for Vancouver, Toronto, and Victoria, I think they picked 3 cities. They decided to expand the parameters so more people would be qualified. But I don't think anybody's gonna take them up on it again. It's just it's people that are first time buyers. Hopefully they don't stretch into an expensive condo or something in this market, because it's going to be very difficult to make money with the amount of new supply that's coming on stream, both with condos and with rentals. It's going to be very, very difficult to avoid losing money on those products. And everybody wants a single family home now, so those first time buyer programs are really designed for people that are buying at the lower price level, which almost always means an apartment rather than a house.
Mm-hmm. Now, of course, in places like Toronto, they're still building condos like crazy. I see the construction cranes up there on the global news when they sign off. It's the Toronto waterfront, and you can still, I counted 7 or 8 cranes just in that one television shot. Is Toronto still Crane City?
It's number 1, so it's 124 cranes, and the second biggest one is like Seattle at 48 or something like that. New York is tiny, like it's got under 20, and so Toronto by far is the biggest. And interestingly enough, the 5th biggest one is Calgary in North America. I'm talking North America now, so I have no idea how Calgary's got 34 cranes going, because as everybody knows, Calgary's been in a slump for at least 5 years now, and it was December of 2014, and so it's actually 6 years now. The OPEC is having a meeting now, and they're having trouble. It's falling apart because they can't agree on whether to cut or what to cut. And it was December 2014 when OPEC first. The Saudis were always expected to be the ones that cut to try and keep the price of oil up, and they said, no, we're not doing it anymore. We're not going to play that game anymore, because everybody else would cheat and produce more than their allocation. And then the Saudis would have to cut back to balance it. And they said, no, we're not going to do it. And that was right after that the oil price slid. The whole oil market went into a downturn. Calgary, things got really bad in Calgary. And they've been pretty bad ever since. So I have no idea. There's certainly no office towers being constructed in Calgary, I'm sure. So they must be residential. And I imagine most of them are rentals rather than condos. They call it purpose-built rentals. But still, I mean, Calgary is growing at 2.3 or 2.4% annually for 10 years. I'm sure it's not growing much at all anymore. The population might even be shrinking. So, I have no idea why Toronto and Calgary are still building so much, but they're doing way more than anybody else in North America, adjusted for population.
And I think Toronto's one of the cities where there is definitely an exodus from the city out to the countryside.
Well, yeah, apparently, this is just anecdotal, and you have to be careful because people in the real estate industry are always trying to put a positive spin on things, but they're talking about bidding wars in Peterborough and places like that, and Oshawa and all these different places outside of Toronto. So if people can work from home, they figure, well, as long as it's got an internet connection, I guess I can do it. And the prices are not that cheap out there, but they're a lot cheaper than in Toronto. So the big problem in downtown Toronto in the core is it's mostly apartments. There's obviously very few single-family homes, and the few that are there are very expensive. And there's just a huge surplus looming. The number of units, I forget the exact number, but there's something like 60,000 under construction, and the average tower, high-rise tower, would have from 200 to 300 units. So that's like, that's a lot of high-rise towers. It's a lot of space to sell or to occupy, and then there's a whole bunch of people that these people that have been buying these single-family homes outside of Toronto. It was so hot there for a while during the April, May, June, July when the COVID thing was people were first panicking about this. There was no way that they sold their downtown condo before they bought their single-family home out on the outskirts. So now they own two. They own the condo and the home. I don't know how they got financing for it, but that would be an interesting story to research. But anyway, now they're stuck with two places, and so we'll see. There's obviously a lot of condos in the downtown core in Toronto that are listed for rent, and a somewhere very large number that are listed for sale as well, and then a whole bunch of new buildings that are just being completed with 124 cranes. So it's got the makings of a major crisis with a way oversupplied market in apartments.
Yes, and now that people are allowed to work from home, you found out the experience. You need your own space to work. So if there's two of you at home, it gets a little crowded. Well,
yeah, you need, so we were just doing a small renovation. We got really lucky. We got, a friend of ours found this big company that had ordered a whole bunch of office furniture. And then, of course, they changed their mind. Being Alberta, they canceled the order. Well, they'd already bought it, so they had to pay for it, but they didn't want it. So we were able to pick it up just for the cost of installation. So they came in last week and put in this beautiful suite of office furniture. Not the chair, but we already had the chair, but the desk, and it's got the tray for the keyboard and all the stuff. It's even got locks on the. So now I'm going to be down in the basement, and I'll put my Zoom room together down there, and it'll be good. The only thing is the window isn't very big because it's the basement, but I can sort of see the sky and a little one or two trees. So I guess I'll be okay.
Well, when I worked at CKYL in Peace River, the control room was in the basement with a little tiny window. And one day I announced that it was raining hard outside, and I was getting all these phone calls. What are you talking about? Turns out it was the lawn sprinkler. It was a sunny day. We'll have more with Hilliard MacBeth right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Welcome back. We're speaking with Hilliard MacBeth. BC was famous for being the first province to bring in a foreign buyer's tax. The provincial government, the NDP, expanded it to cover just about the entire province. a lot of people said it wasn't needed because the big boom in real estate was over, but now Ottawa is eyeing a federal foreign buyers tax. Is that of concern to the real estate industry?
Well, I'm sure it is. I mean, I don't know how much of the foreign buyer bid continued into this era. I suspect it slowed down a lot. A lot of it, some of it was obviously parents buying apartments for their children who were attending school, and I think that's really dried up. And then there was the people buying the higher end homes in West Van, and that seems to have dried up as well. So, one of the things is this they didn't actually put it in. They just said they were going to put it in next year, which is usually which is not normal, because once you announce it, you might as well put it in, because nobody that's thinking about owning a place as a foreigner is going to want to be subjected to that after they buy. So it's a very unusual step, and I think they had so much pressure on them that they felt they had to do something. And the other thing that BC is doing now, this is just a provincial initiative, is they're talking about, and it was about ready to come in, and then I think they put it on pause, but it was this beneficial owners registry. So they were going to make a registry of all of the beneficial owners of the various, and that would include identifying all the foreign beneficial owners. So that probably scared a lot of people off as well. And then less well known is the fact that the Statistics Canada is, I think it's 2022, so we're just 1 year away. They're going to have a national registry of all of the real estate in Canada, which is really will be a good thing, because you get all of these real estate boards and you get all this stuff, and they get all these different price indexes saying the average price, the typical price, the benchmark price, and they're all slightly different. And of course they're tweaking them based on what the story they want to put out. But if StatsCan does a registry of all of hopefully it'll be available to everybody, and they'll be able to see on a particular property what the price, where it sold, when the last sold, and of course one of the things that's missing from all this is the upgrades. So if somebody buys a teardown and then spends $1 million building a new house, and then they sell it for $1.5 million, and the teardown was only $500,000. The price didn't triple. The price is still the same. It's just that somebody invested $1 million in that property, but in the index, it looks like it went from $500,000 to $1.5 million. And I don't know how they would actually be able to track that. The people that calculate the Terranet National Bank Index have said that they aren't able to make that adjustment. So a lot of the gains that you see are overstated because somebody's invested a lot of their own money into upgrading the property and then selling it. So, and of course that shouldn't be counted as a gain. At least not all of it should be a gain. So, I don't know. Hopefully one day we'll get over this obsession with real estate and we'll get into something more important like investing in renewable energy stocks or something like that.
Well, also, I look at a foreign buyer tax as a disincentive to invest in Canada. If I'm going to build a factory or a computer firm here in Canada and I want to move to Vancouver or Toronto to supervise it, or Calgary, well, all of a sudden I'm slapped with an extra tax if I want to buy a home here. Why should I move my factory to Canada when the government's clearly said we don't want you to settle here?
Well, I think that government announced that they wanted to bring in a lot of new people. In fact, it was the announcement about the immigration was an enormous number of people that they were talking about bringing in. So I think they're talking about, not about people that would move here, but people that would not move here, but would buy anyway. And, that's, it's all about money laundering when you get right down to it. And, or people getting some money out of their home country because they're worried about the political environment there or something, and which isn't technically money laundering. It's just trying to diversify their portfolio. And it's always there's lots of countries in the world that are available. Canada's not the only country, so they might change their minds if people make the restrictions to owners in Canada. They'll move to another country. But the other thing about Canada is the real estate is just too expensive. And if somebody's looking at moving their company here, they want to be able to pay average wages. They don't want to have to pay really high wages. And if the real estate's too expensive, they won't be able to attract employees to work for them because the cost of living there would be too great. So that's one of the biggest problems with this housing boom that we've had. Is it's making it just way too expensive to live in Canada.
Hilliard, is there concern the federal government is going to come up with new or bigger taxes apart from taxing foreign home buyers?
Well, you hear it all the time from people that are in the stock market and stuff that they're really worried that with this $400 billion deficit that we talked about, that the government's going to have to figure out a way to raise some taxes. And the Democrats, if the Democrats win the election in the U.S., looks like they did. Some of the progressive wing of the Democrats in the U.S. have been talking about raising the capital gains tax and the estate taxes down there because of course, they're a lot lower down there. But in Canada, the capital gains tax rate, inclusion rate, is 50% of regular income. So you only get taxed half of the normal rate on capital gains, and given that talk that's coming from the U.S., some people are worried that there might be an increase in the capital gains tax next year. It used to be at 100% inclusion, then it was at 75% about 20 years ago, and then they dropped it down to 50%. So it certainly is possible that they could bump it back up to 75%. I don't think they put it all the way back up. The other thing they could do to make it easier for people is say, your first $1 million lifetime, you get an exemption. So for the average person, they're never going to get over $1 million in excess of capital gains. So that just puts most of the burden on the top half of 1% people, and that would politically go over probably pretty well. So it's a possibility, that's for sure.
We'll have more with Hilliard MacBeth right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Hilliard MacBeth. Well, two things have really gone up a lot in the last year. The federal deficit in Canada and the U.S. stock markets. Let's talk about the Canadian federal deficit first. How big of a concern is that?
Well, it's huge. They just came out with the update. It wasn't actually a real budget. We haven't actually had a budget since 2019, so it's a year and a half since we had a real budget. And the government says they can't have a budget until things settle down. So they did an update. But it was a pretty comprehensive update, and they said that the deficit's likely to be $380 billion this year. They got, I don't know if that's for the year. I guess the year ending March 31st. So we're more than halfway through. And then they also said that they're reserving another $100 billion for stimulus over the next 3 years. So those numbers are absolutely off the charts, even in relation to other countries. So if you look at what other countries have done. Most countries haven't done anywhere nearly as big a stimulus as Canada has done. So either we were really in dire straits compared to other countries, or they overdid it. I don't know which, but we'll find out. The advantage the federal government had was they were, compared to other countries in the developed world, had one of the lowest debt to GDP ratios at 30%. But in a little over a year, they've doubled the debt to GDP ratio from 30% to 60%. And when you count the provincial debts in, like Ontario and Quebec and now Alberta and BC, the debts are adding up to the point where Canada has sort of in the middle of the pack now in terms of the total government debt to GDP. But when you add the private sector debt, where Canada is leading the world in private sector debt, that's household and corporate sector debt, then the combination of all puts Canada in the top 5 probably. I don't know. The debt to GDP numbers are all wacky because GDP dropped so much earlier this year when COVID hit, and so the numbers the ratios got elevated quite rapidly, and then we've had a rebound into GDP, not back to the level it was, but quite a ways back, and so the numbers are kind of bouncing all over the place. But when all the dust settles, I'm sure that Canada will have one of the highest. I think we won't be the highest. I think Japan still has that number 1 spot, but we'll be up there in the top 5 for sure. But the bigger concern, of course, is not the government debt, but the private sector debt, because the private sector debt, if they can't pay it back, if they can't get their hands on the money, corporations and households can go bankrupt, whereas the government generally just prints more money.
Now, the stock markets. March, we had a big crash, and we lost a lot of money, but since then, things have been booming. How good was November to the stock market?
Well, no, so November might have been, and in Canada it was good too, but in the U.S. it was absolutely crazy. November might have been the best month ever in the history of the stock market. It was up more than 10% in 1 month, so that's usually a pretty good year for the stock market. We had a good year in 1 month. And year to date, the S&P 500 is up 12%, which is pretty good. I mean, it would rank in one of the better years. But the Nasdaq was up a crazy 38%. And, you and I have talked in the past about the difference between renewable energy stocks, which are up something like 80% year to date, and the oil and gas, sector, which up until recently was down about 40% year to date. It's recovered a bit since then. So Canada is not keeping up with the U.S. and some other countries because of the effect of the drag by the fossil fuel sector, oil and gas. And but all in all, all the stock markets had a pretty good month and year. And now with the valuations, so you and I talked back in February about the valuations in the U.S. market being at record high levels, even perhaps in some ways surpassing the internet.com bubble in 1999-2000. And now we're right back there. In fact, we're at levels that are depending on whether you use price to earnings or price to sales. And price to sales, we've surpassed the peak, which was in 2000, March of 2000. In price to earnings, we're a little bit behind, but very close. Well ahead of 1929 before that crash. So it's absolutely mind-boggling to think that we, in the middle of the most severe recession since 1945, the stock market would be at record high levels.
Also, getting near the top again, Bitcoin. I remember when it peaked because it was on my birthday 3 years ago, and everybody was discussing at the party, oh, you got to get your Bitcoin. It's at $20,000. You can't miss. And of course, it crashed the next day. Well, it's up at the $20,000 mark. Is that a tipping point again?
Well, I don't know what makes it, because you can't really use it. The thing about currency, if it's trying to be a currency, then the thing about a currency that makes it valuable is you can use it to pay your debts, including your debt to the government in the form of taxes. And that's sort of what made all currencies valuable. When people started giving people paper money, it was hard to convince them to take paper money. So now you've got a Bitcoin, and there's a bunch of other ones too. There's Ethereum and Tether, and there's about 100. Many of them are scams, right? But some of the biggest ones, like Bitcoin's the biggest, and I think Ethereum's the second biggest. There's some pretty serious dollars have gone in. They're still pretty tiny compared to, say, the gold market, but they still don't have that ability to pay serious debts like the debts to the government, to the tax department. So the appeal is sort of a bit of a mystery. And the people that are doing it, I'm told, are people that are afraid that the government is going to make paper money worthless. And therefore you have to get your money into something solid. Well, I grew up with gold, and gold is still relatively cheap compared to previous peaks. The last major peak was in 1980. And in those days, it was $850 an ounce for gold. And to get to that, it would have to be around $2,200 an ounce today with inflation. And gold right now is around $1,800, $1,850, $1,900. It got up just above $2,000 for a while. So it's still below its peak. So, and there's all kinds of gold mining companies that are really cheap now, even though they're making absolute record-breaking profits right now. The share prices of the gold mining companies are really still quite depressed. So in the Depression, when people got worried, people got worried in the 1930s that the government was going to make paper money worthless, and so they tried to move their money out of bank accounts and put it into gold. The government actually banned the ownership of gold because for that exact reason. They didn't want them to drain all the money out of their bank accounts because it would have such a negative effect on the economy. So this thing with Bitcoin, getting back to Bitcoin, is sort of similar in that if everybody buys Bitcoin with their money, it could be a very negative thing for the economy because you can't really use Bitcoin to do a lot of GDP type transactions. So therefore, GDP would have to decline if people had a substantial amount of their money in Bitcoin or in gold for that matter. But so far, it's a tiny amount, so it's not. And one thing I discovered, I was researching Bitcoin recently. I discovered, I think most people know the story that there's a maximum of 21 million Bitcoins that will ever be created, according to the founders. And the identity of the founder, of course, is still a mystery. But so far, there's only been 18 million produced. So there's still 3 million left to mine. They're called Bitcoin mining, right? But out of the 18 million that they produced so far, 4 million are missing, and nobody can find them, so they're lost forever. So I don't. There's 4 million Bitcoin out there that have been lost forever, and I guess they would be very valuable if you could get your hands on them at $20,000 a Bitcoin. That's what's that? $80 billion worth of Bitcoin that has disappeared.
And of course, one thing people point out, whether the price of gold goes up or down, gold is still worth something. There's a planet-wide power failure. Everybody's Bitcoin might disappear forever.
Yeah, the gold you can actually take physical possession of. I wouldn't recommend it, but I mean, there's gold jewelry, there's gold coins. We bought a gold coin, and it's kind of nice to hold it in your hand. It's worth the 1 ounce coin is worth $1,800 US or $1,900 US. So it's not, it's okay. So it's good. It's a good feeling. I don't know about Bitcoin. Is just an entry in the? Now I should say I didn't go and buy. Somebody said to me probably 3 years ago, as you said, when the last peak, said you should go and buy a Bitcoin and just get your wallet and go through the experience of getting a Bitcoin and see what it feels like. But most people are not buying them; they're mining them. And in order to mine them, you have to do this very complicated calculation, and you have to have very powerful computers to do it, and you have to use a lot of electricity. So people get these computers and they try and figure out how to get electricity without having to pay for it. There's stories about people tapping into their neighbor's electrical power unit so that they can stick the electrical bill on their neighbor's power so that they don't have to pay for it.
Hilliard, always fun to chat.
Nice to talk to you again.
My guest has been Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. His website, MacBethMcLeodGroup.com. If you have any questions for Hilliard or any of our other guests, you can send them to info@HoweStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HoweStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.